After that, you reach 333 and you're still outside the final 10%. You're still beyond that final 10%. You understand? You might witness four figures. So I skipped the gold-silver ratio. In my view, gold-silver ratio. The endpoint for silver is single-digit gold-silver ratio. I don't require showing you a graph for that. And inside that, there's room for outperformance because extraction presently sits at 6. 9. It will require significant effort to raise that. It's a secondary output in 60+% of supply. Roughly 60 to 70% silver represents a secondary product. So merely 30% or 35, let's say, is truly governing volume. And truly specifically going down there for silver. I believe it's marking the final moment you could have purchased at 25. 9 prior to surging 1,200, perhaps 2,500, essentially 100x. I believe that will be remembered as the dollar maximalist's greatest pinnacle dollar maximalism. The marketplace is nearing a historic inflection point where the gold-silver ratio might collapse into single digits, sparking a movement that drives silver values into the 4-digit territory. A severe supply constraint fuels this explosive possibility. Since nearly 70% of worldwide silver gets produced simply as a secondary product of base metal extraction, output cannot readily expand to satisfy increasing demand. This rigidity creates a situation where a monetary transition could initiate a violent upward revaluation. Francis Hunt, recognized as the market sniper, is a technical analyst who focuses on identifying extreme asymmetric market possibilities. He contends that the period of dollar maximalism is cresting, cautioning that previous lows were probably the ultimate entry points prior to a paradigm shift. Hunt predicts a possible 100 times expansion, aiming at values as elevated as $200 or even $2,500, propelled by the reality that primary silver availability is too restricted to absorb the approaching wave of capital. Currently, we present the segments from Francis Hunt's interview. Prior to continuing to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video. The crucial element of the narrative, the macro HVF, colleagues, the macro HVF, its objective is 333. That's correct. You heard me correctly. The Jerusalem Post heard me correctly. By the way, you can search Francis Hunt's in the Jerusalem Post. They've captured the 3 threes, and fair acknowledgement to them. They reported quite precisely in terms of that, and well done. I believe that's precise. Another localized peak, not the ultimate summit for silver regarding the larger portion of this movement. I believe it's marking the final moment you could have purchased at $25, 9 prior to surging 1,200, perhaps 2,500, essentially 100x. I believe that will be remembered as the dollar maximalist's greatest pinnacle dollar maximalism. It's a silver period, it's a silver year, it's 16 years of silver dominance, and here it arrives. So I find it paradoxical. Anyway, so returning back to what we discussed, this was at a crucial level. This represents a huge movement. It's been extraordinarily beneficial. And those that were claiming there's no simple entries anymore. All the low-risk entries are here. You understand the folks that were getting somewhat worried regarding, the momentum on the big time frame, 100%, correct? Because where do you place a stop? You place a stop down here, and you purchase somewhere there that's a massive loss. You require a substantial gain just to achieve a 1:1. But the benefit of HVF methodology is keep on keeping on, is our direction. And in most cases, the balance of probabilities are when you obtain a squeezy Japanese, you break toward the upside. This is among the most robust, and you are in the melt-up stage where it's destined to be a higher proportion and deliver you more. You're simply going to feel like a luckier trader. What about 7? 3 bars for 7? 5? It isn't finished at 92. It'll likely be 10. What about that figure? Doesn't tell you lucky trader that's made out of pure skill. You don't achieve those returns in an 8-month window. You don't. You seize the critical moments. We are snipers for the critical moments. Do you comprehend? It's a 40-year position that this is compensation day. It's 40 years without wages suddenly all delivered to you with bonuses and back payment and tax refunds all included in times 10. I've mentioned many times previously, and I'll mention it again, I was informing a friend who was walking his canines while I swam. Mad canines swim in that frigid water, and I love it. It's a hockey stick profession. I said it's a hockey stick profession. I've cautioned many individuals it's the parabola profession trading, because by the moment you obtain the experience, if you traverse the desert, most don't complete it. They don't possess the methodology. They do not acquire the learning. They don't possess the rational wall to optimize for events like this. And now I acquire to trade reset at the point I'm at my greatest level of experience capability with the optimal methodology. It is a hockey stick even for me. And I've performed well previously, but it's destined to be a hockey stick to conclude all hockey sticks. It can be for you. Have you clicked the link yet? Are you scheduling your call? That's what you should be questioning yourself. This is a totally transferable ability. It's not what I've been capable, I don't care to boast. Actually, it's foolish. I prefer a reduced profile, and like I say, I want to vanish, and I'm destined to purchase some gold with it, and the vessel's going to sink, and I'll have lost my funds, and I'm in fool. That's how the news narrative is destined to conclude. But in terms of you, it's a transferable ability. It's a transferable ability, and you could be executing it. Okay, so that's silver. It's been a tremendous period. Be cautious now. Yes, it could surge. It could proceed. It can proceed 104. I've truly got one or two speculative exits at 104. I've got one or two around 198, but the 92.5 is the final objective. I've got the bulk closing there. Then I can leave a few speculative long shots. If it begins to appear ugly, I can discretionally trade them. I possess the time. I'll be monitoring it. It's a crucial moment where a decision might be executed. HVF informs you when you must concentrate and when a crucial decision might be executed. If I want to exit out, I simply change all the take profits to 92. 5. I let it surge. It's all closed while I'm sleeping, dancing, eating, whatever, okay? I desire to extract a little bit more out of it. Then you got to invest in the time, okay? And you got to comprehend candlesticks and price behavior. If you believe you're too late, you're not. You're not. The optimal is yet to arrive. There may even be retreats. We may even obtain a little bit lower, but seldom will that be the case. When we obtain on our bike again, and truly you get pedaling after any retreat, and I don't understand how long that'll be and how deep it will be, I can't inform you. I'll monitor and I'll wait. I'll let the marketplace inform me when it's ready. It might not occur to a big degree. It might merely be a day. It could be a week. It could be more. Could be months. But when it is, I will be there and I will be leaning hard. And then, colleagues, then you proceed to 333 and you're still not in the final 10%. You understand, you might witness four figures. So I skipped the gold-silver ratio. In my view, gold-silver ratio, the endpoint for silver is single-digit gold-silver ratio. I don't require showing you a graph for that. And inside that, there's room for outperformance because extraction presently sits at 6.9. It will require quite a lot to raise that up. It's a secondary output in 60+% of supply between 60 and 70% silver represents a secondary product. So merely 30% or 35, let's say, is truly governing volume and truly specifically going down there for silver. So you don't alter that availability quickly. So you can proceed to gold-silver ratio at 6, 9, and markets overreact. It's quite plausible you could proceed 1 to 3. A facility can't simply start utilizing gold even if silver spiked more costly than gold. Currently, I'm not claiming it's destined to do that. I'm simply stating at a hyper extreme. They think, listen, we're constructing with this material. We can't pivot and alter for an entirely different. They require time. They require to do new planning, new layout, new infrastructure. The factory isn't prepared. That's another thing we never talk about that in transitions. It can take 2 to 4 years. You don't just flip something. Silver is currently, as a backdrop, silver is holding its parabola if you look at the larger time frames. It was probably one of the most under-discussed situations is the parabolic phase now. I think this is likely the final serious quarter to 6 months prior to we alter the structure on the product and the pricing. You should capture your opportunity now. Silver is presently adhering to the law of the parabola, a market phenomenon where price action accelerates exponentially relative to time. This vertical climb is not an isolated occurrence, but the inverse reflection of a collapsing global fiat debt bubble. As nations face insolvency from unmanageable leverage, tangible assets are repricing rapidly, generating volatility that is reportedly pressuring major liquidity providers like JP Morgan to the breaking point. Technically, the marketplace has breached a critical milestone, hitting interim level 2 at approximately $90. 58 on the 6-month graph. This marks 6 consecutive periods of gains, a rare sequence that signals a macro rest period or localized peak rather than a bearish reversal. While the long-term direction remains violently bullish, the immediate implication is caution. The optimal strategy at this stage shifts from aggressive accumulation to leaning out, reducing leverage and securing profits to safely navigate the inevitable consolidation before the next explosive leg higher. Let's get back to the interview. Here's the silver graph. Let's go here and let's close the plotter there. This is the law of the parabola. I'm destined to execute fat cokie on this background. It is the silver graph. But this is the law of the parabola. And I believe this is individuals don't appreciate this sufficiently. And you truly need to remain in for the whole journey. You understand this is how the graph looks on a larger time frame generally, and this is how it proceeds. And this is what's called a parabola. It does something like that. You almost desire to bend it backwards and execute loopy-loop. But, you can't proceed back in time. There's no time machines. And in the beginning, around about 25, this is time and this is price. So time over here and price over here where the price presently is. And what tends to occur is you can be this amount of time and you obtain that amount of return. So the return, we alter color for the return, and we proceed blue is the difference between what the price was there and you proceed parallel to what it is here. And then you obtain a little bit later in how things are developing. And you obtain, okay, this is the present price, for example. Let's take an example somewhere here. That is your time of entry. That is your price. Because one of the questions most of you are questioning is it too late to purchase investment silver? Is it too late to trade silver? Is it too late to purchase gold, platinum, or miners, or etc.? And the answer is invariably no. But for most individuals, they don't know how to proceed about it. Everything's costly right now to you, and it's destined to get a whole bunch more costly. Why? Because we informed you that the debt fiat bubble, this is something Minister AI didn't discuss about, is truly the inverse parabola of the gold graph on the big time frame. You are truly going slowly at first and then suddenly very fast. That is bankrupting nations. So what you truly have if you add the blue line with the pink line is you obtain the orange line, the gold value holding value benchmark of accounts. J.P. Morgan said, or is attributed to be said, it's a bit like Abraham and Lincoln stating, don't believe everything you read on the internet. But he's been attributed to have said that gold is money and everything else is currency. In short, way back then in around, and he was the hero of the Depression. In fact, he owned very little of J.P. Morgan. It was his name. And in fact, legacy families held the bulk of the value of that bank, and it holds the Fed, and it's likely the liquidity provider that's presently squeaking about certain accounts that are going very aggressively in silver. Of course, it's the volatility in the market movement and the consistency of the market movement that's caught a lot of individuals by surprise, caught banks by surprise. You see, I'm amazed I obtained away with this so long, and I will show you soon what I feel like I obtained away with. That amount of leverage, that amount of access to an HVF in a parabolic macro melt-up stage, that is stage 3 of an upside HVF. So here we proceed. This is where you're at. Now, what you might notice is there's a pink dotted or purple dashed line there. Let's clean our face a bit, get rid of all our sketches. You've just crossed an interesting line. Since our primer break, by the way, 6 months, you have had 1, 2, 3, 4, 5, 6 periods of 6 months. Oh, all the 6s in there, 6 periods of 6 months net green. Now, the 1 was kind of just square. I'm counting it as green up, just flat stroke up, mega up. And this one right here that you're still working on this 6 months started in January. If you're wondering why it's not fat, it's merely had, colleagues, 14 days. All of these had 90 days. Now, they're not all trading days. We know that it's 21 trading days a month. So it's likely 63 on average. It's at 63. You've likely had how many trading days for silver this year? Perhaps we've had 10, okay? So this will fatten as we move. But the crucial point is it's made an interim level 2. It's made an interim level 2 of 90. 58, or has it? What's the high on the high is 90? Whoop! Let's stay on the 6 month, 91, 57. You have made the interim level 2 on the upside HBF methodology break. You have made it. Now this is a big structure. Remember, we've explained it's a 6 monthly pattern. It's the largest one I possess. As I say, the up leg started way down here in this, the 70s, the 64, I would even say prior to the 68, way back down here. This is all one big up leg. So this has been brewing for a long, long time, and you can have a retreat during this period given you've run that. Now you're on alert. Now is not the time to whale in with leverage. But there's something else, and this is where we proceed to the lower time frames. And you find out that yours truly, the market sniper and the merry men on the 12-hour, the 2-hour, my apologies, have obtained another draw on the go. So here's what occurs when you are coming up to the 90, 58, which is the macro rest period, not a summit, not a bear market call. Please don't be foolish. Localized peak with a possible retreat doesn't have to be big. Could have a blow-off movement through it first. You can proceed through it properly. We haven't fully finished going up, and I'll explain to you why. But when this 4-hour, this 2-hour ends, I desire to be greatly leaned out on those testicle-squeezing longs of the J.P. Morgan liquidity provider to the brokers. I desire to be on a little bit backed up and reduced by size. Silver is presently adhering to the law of the parabola, a market phenomenon where price appreciation accelerates exponentially relative to time. This vertical climb serves as the inverse reflection of a collapsing global fiat debt bubble, generating unmanageable volatility that is reportedly placing immense strain on major liquidity providers like J.P. Morgan. As the direction enters this melt-up stage, returns are condensed into short explosive windows, signaling a structural repricing of tangible assets against failing currencies. Technically, the marketplace has breached a critical milestone, hitting interim level 2 around $90. 58 on the 6-month graph. This marks 6 consecutive periods of gains, a rare sequence that points to a macro rest period or localized peak rather than a bearish reversal. Consequently, the optimal strategy at this stage is to lean out, reducing leverage and locking in profits rather than chasing the movement as the marketplace prepares for a necessary consolidation before its next major leg higher. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.